Hello, my name's Neil Folks. Thank you for joining us on our short presentation on why budgeting is good for business. We hope that you'll find it useful. And I guess to start with, we'll tell you a little bit about our firm. So we're One Accounting, we're based in Edinburgh, and we work with owner-managed businesses. We like to help these owners to get from the business what they were hoping for when they started in business. We help them to focus on what's important in the business and help them to get their finances organised. That gives them a sense of control over their business, and hopefully they'll have more fun and make more money along the way. So why budget? Well, the bigger question is probably why plan? It's an interesting question in terms of when's the last time that you took time out to think about your business goals. And for a lot of business owners, once they get started, that isn't very often because they get caught up in the nitty-gritty and the day-to-day tasks that overtake them, just getting things moving and keeping things running on a day-to-day basis. Ultimately, budgeting is really about the allocation of scarce resources. And really, that is one thing that every business owner will face, whether they're large or small. You may think that your business is a bit small for creating a budget, but hopefully once we've been through this presentation, you'll see that the budget is much about linking it to the overall plan for the business and how you're actually going to have a route map of getting there. And so it's really appropriate for businesses of all sizes, and hopefully you'll agree by the time we get to the end of this. So in terms of scarce resources, I guess, and for business owners, the biggest one is probably time. But when you think about it, there are a few others as well. So most businesses will face some sort of limitation on their funds unless you're very lucky to have an unlimited source of cash that you can do with what you want. In terms of people, you may find that it's difficult to recruit the right type of people, or because of the area that you're in, or that you just can't afford to pay enough people for the number that you would like to actually have on board. In terms of space, you may find that you're outgrowing your current space and that you need to invest in larger premises, or you may find that they're not fit for purpose in terms of the ones that you're already in. But certainly for most owner-managers, time is the biggest factor. There never seems to be enough time in the day. It's a scarce resource, and it's one that ultimately you can't get back. So once it's gone, it's gone. Well, I think, you may well be asking, why or how will budgeting help me with my time? Well, really, it's going to help you focus on how to allocate your resources and ultimately where you should be spending your time. And that's really the bare bones of it. So if we look at the budget and how we get to the budget, really there's a few different steps. So where I like to start is looking at your personal goals. So again, if you've not sat down and done that for a while, really you should take some time out of your business. Think about why you're actually doing the business. What do you want it to bring you in terms of the lifestyle that you want, financial aspirations, possibly the amount of time that you have available to do other things. And then once you have these, you can start linking them into a business plan or business goals. So for most owner managers, the business goals that they have will ultimately reflect their personal goals and what they're trying to achieve there. And once you've done that, and ideally have written them out, then you can start working on a budget. So a budget is really just an allocation of these resources showing under a certain given set of circumstances how you're going to achieve your goals. And I think if you've never written down your business goals, then that is a very good place to start. A lot of you will have heard the acronym of SMART. So what that means is specific, measurable, achievable, realistic and time-based. So these are the words that you should apply to every goal that you have. And once you've done that, once you've made sure that you've got your goals written down, that they're SMART goals, then you can start to translate your plans to a financial budget. And there's really three elements of that. So if we look at these individually, then really a sort of brief explanation on what you're trying to achieve with each one. So the profit and loss is going to show you how much your business is going to make, or Possibly it might be showing you how much it's going to lose if you're in a startup phase, for instance, and how that is going to come down over time. The balance sheet is really just a snapshot at any point in time showing you the excess of business assets over the excess of what the business is due in liabilities, or certainly that's the ideal position. If it's the other way around, not a good position to be in. So really, in some respects, although it's a very simplistic way of thinking about it, you could think about that as your business worth. Now, for lots of reasons, that won't reflect the true value of your business, but it will reflect a sort of starting point of where you would like the value to be. And certainly it will give you an indication of, you know, how healthy and strong your business is in any point in time and how able it is to survive knocks in the future. So if you've got a big buffer in terms of the amount of assets that you have against the amount of liabilities that you have, then that's a good sign of financial strength. And the cash flow is different from profit in much that it's actually showing, is your business going to generate cash or not? So ultimately, if you're profitable, then over the long term, your business should also generate cash. But you can get in a situation where a business can be profitable, but it could be cash negative. For instance, you may have bought capital equipment, you may have bought other equipment or had expenses that are going to sit on your balance sheet as assets, but aren't immediately appearing in the profit and loss account. So the cash has gone out of the business, but in terms of affecting your profit and loss, it won't show immediately. The opposite of that can also be true. So certainly in the short term, you could be loss-making but cash positive, and that could be because you're doing things like stretching creditor payment terms. You might be working hard to bring cash in from customers much quicker. You might be trying to bring down stock if you hold stock. So ultimately, over the long term, if you're loss-making, then you're going to eventually be cash negative. But certainly in the short term, the two don't always go together. So these are things to think about when you're actually going through the budgeting process. There's a couple of ways of thinking about where you can get the sort of headline numbers for your budget. So we've got, this is option one. And the way that I like to think of this is what do you need your bottom line to be? So at this stage, we're thinking about profit before tax, really. It would be possible to do a profit after tax scenario, and we would just slot another box into this sort of equation to allow you to do that. So again, if you think back to what your personal goals are and what your business goals are, then this is quite an easy place to start, because hopefully one of these will be financially related. So you can, for instance, say what you want to earn out of the business. So where you've got an aspiration to increase your earnings, this is a really good way of building up your budget from there. So in terms of sort of headline numbers, start with the bottom line. What do you want it to be? We can then look at your required profit is really your overheads divided by your gross profit percentage. And if you add that to what you want your bottom line to be, then you'll get your budgeted sales number. So a lot of people will say, look, it's really difficult to budget sales in my industry. That may be true. It may be difficult to get an accurate forecast, but it's always possible to put together a budget, even if you just do it on this basis, which effectively will give you an aspirational budget of where you want to be. For the second method, so option two, we can start at the top and work the way down, rather than doing it on the option one, where we're effectively starting with the bottom line and working our way up. So you could take a stab at what you want your budget sales to be. That can be really useful where maybe your gross profit is changing, or it may be that you're introducing a new product and you want to put that into the mix, and you're taking some sort of guesstimate of what you want your new sales to be. So if we start with the headline sales number and we take your gross profit percentage, take away overheads, and then we get back to budget profit before tax. So both methods are equally legitimate. It really just depends on which way you want to go about it. And that very much probably depends on the scenario that you're under. So in terms of where to start, again, here's a little flow of how to go about things. So some people will say do the draft budget first of all and then list the assumptions. It may be that for you, you want to do the assumptions first and then prepare your draft budget. The two key things here are really get started on it and list out the assumptions that you've made within the budget. So that's a really key point in terms of there's no point just putting together a set of numbers, but what you'll find at the end of it is that you don't have any real understanding of how you came about them, and that's where the assumptions are really key, so that you have bullet points just written down of what's actually the foundation for your budget. We can then go into what-if scenarios. So what we're really doing here is testing some of these assumptions. So for instance, you may decide that your sales, you're going to budget for them to increase by 10% during the next year. On a what-if scenario, you may want to do something like looking at what will happen if your sales increase 20%, for instance, or perhaps they decrease by 10%. What does that make the bottom line look like? And the what-if scenarios are a valuable part of the budgeting process because they really just give you some indication of how volatile things can be, and to a certain extent allows you to start to plan to take action if some of the unexpected things happen, then you're putting in a plan to deal with them. So once you've gone through the what-if scenarios, you can then check your goals and plans, and again, do they meet is the scenario that you've built in the budget, does that actually meet the goals and plans that you've built? If not, then back to the draft stage and run through the cycle again. We've got a little tool here just to give you an idea of what a what-if scenario might look like. Very simple, but if I just talk you through it. So on this one, where we have base cost or base leads of 50, conversion rate of 30%. So basically for every 50 leads that are brought in, the number of new customers is 15. An average sales value per customer of £3,000, and each customer buys 10 times a year. So that gives a total sales value of £450,000. Gross profit is 40%, or the gross profit percentage is 40%, and that gives a gross profit of £180,000. Now, what I'm going to show you on the next slide is we've kept the numbers the same, but we've put small increases through on some of the lines. So leads have gone up by 2%, conversion rates improved slightly, got a bit better at selling, so 3% increase. Average sales value has gone up a little bit, so that could be a price increase. Number of times a customer buys a year, we haven't changed, and the gross profit, we're making the product more efficiently, so it's gone up by 1%. Now what you'll see is that although the increases are relatively small on each of the lines, if you go to the bottom right hand corner, the increase in gross profit is 18,639, and that actually translates to a 10% increase in profit. So what this shows you is that by playing around with the numbers, even with small increases, or we could do it the same with decreases, it will show you the impact on your bottom line. So quite a useful tool just to do some what-if planning. We're happy to provide that with you, or to give that to you, so all you need to do is send us an email at info@oneaccounting.co.uk. We'll send that tool on to you. You can play around with it to your heart's content. If you'd like to know a bit more about budgeting or building one in a bit more detail, then please contact us. Telephone number is there, it's 0131 220 0152. And finally, it's not just budgeting, we do all sorts of other accounting services, so if you like this type of thing, what we're doing on the webinars, then please give us a phone. We'd be delighted to talk to you about your business and what we can do to help you. Thank you for your time, I hope you found it useful, and have a good day.